Good afternoon, Fabian Onetti for the Musings of Winston, June 7 through the 11th. So the title is Inflation. What inflation? Go long. But before we go into that, one of the biggest things that we discovered this last week, this is a great study. You get it on the email on McKinsey, which it goes pre-COVID, 99% of the people were 80% in the office or more. Only 1% were a little bit less. They expect that we're going to go from 99% to 10%. 99 to 10. 80% of the people will work now, 90% of the people, in some form of hybrid or completely off the grid or basically off the office. Very interesting. I've been having a lot of conversations with friends about this. This is something that is here to stay, and we think it's going to be very important. We're going to be talking about that all through the next couple of weeks, inviting experts, real estate, office, recruiters to talk about this McKinsey report. I think it's very, very interesting. Also, we had a week with a lot of cyber war. A lot of websites went down last week. New York Times, Bloomberg, BBC, CNN, and also the Federal Reserve, for the first time, recovered some money from a ransomware on the Continental Pipeline. We also learned that GBS, the largest meat producer in the world, suffered a ransom cyber attack, and it paid an $11 million ransomware. And we'll see if we recover something. Speaking with some experts, they tell me that once the hackers develop this ultra-sophisticated hacking protocol or code, they try to do as much damage as possible before the anti-hackers find the antidote to stop it. Sometimes they even sell it to other hackers to make more efficient use of their time. So, very interesting. A lot of cyber stuff. As we say, the topic is inflation. What is inflation? Although the numbers were not super high, but higher than expected, talking about even almost like a 5% annualized inflation, once the market looked inside, it kind of is buying the argument of the Fed. The numbers are very transitory. The main thing is used cars because there are no cars, regular cars because they're cheap. Airline tickets, when you compare with last year, which basically there was no flying, obviously now they're higher, and then leisure, hotels, rooms, same. When you compare hotels with last year, there's nothing. So once the market discovered that, it basically, at the bond level, it had a very big rally. It went to 145, a number that we haven't seen, I think, in a year or so, and the markets went into new records, especially the Nasdaq, which is lagging. While the Dow Jones and the S&P are up 13, 14%, the Nasdaq is only up 8%. But last week it was the one that did the best, 1.6%, and the S&P did 0.4%. We like the Nasdaq. We like better the technology names. We like the names that are fresh money buy because they are lagging, and eventually we think they will catch up, especially after the great numbers that companies like Apple, Microsoft, Google, Netflix posted for the first quarter of the year. So that, and on the bond side, going back to that, more and more people are believing the points of the Federal Reserve. They're saying, listen, we still are short 7.6 million jobs. So our focus will be nothing but trying to get the economy into full employment. Then we will deal with inflation issues or others, which, by the way, we don't think they're permanent at all. So before we go into what's coming this week, the other big news on company-wise was the Biogen approval of aducanumab, the first drug for Alzheimer's in almost 20 years. Stock was up 40%. However, over the end of the week, 3 members of the independent panel, some prominent scientists, resigned, saying that the drug is not really good and the data is very, very incomplete. So we'll see what the story happens this week with that. We had the meeting of the G7, a lot of the announcements. We're going to study that in detail over the next week. Nothing of big substance, or at least of a market impact. A lot of talk about COVID, but nothing really to write home about it, as we should say. Now, this coming week, we do have producer price index. The market expects 0.4, higher than expected, but lower than the 0.6, 0.7 that we had the prior month. as the old theory goes, first you get PPI to increase and then the CPI increases. First the producers suffer increasing prices and then the consumers suffer. Historically, the PPI was released before the CPI. I don't know why the Department of Labor Statistics changed that number. So we will see what's the story there, what happened, and we'll report. And then we have a meeting of the Fed Tuesday and Wednesday. Nothing is expected, obviously not in red, obviously in rates. Also, nothing expected on the tapering front, whether they're going to stop or cut the program of buying bonds. But like always, Jerome Powell will make a statement, which everybody will be looking, especially at the transitory component of inflation, and then the open Q&A, which always might give us some insight on the thinkings of the most powerful man in finance, the chairman of the Fed. Have a great week. Like always, live in Zoom, interactive at 8:30 from New York. You'll get more information in our page that comes here. Have a great week.